Good morning and welcome to everyone joining us today. I believe by now most of you know who I am, but if you don't, my name is Massimo Grassotti and I'm part of the investor relations team here based out of our headquarters in Stockholm. If you joined us last week, you know that we've been closely monitoring the situation between Russia and Ukraine with help of East Capital's very own Jacob Grapengiesser, who is senior advisor, partner and deputy CIO. With that, I'd like to welcome Jacob from our office in Moscow. So if we begin right away, markets have been on a roller coaster this last week, not to mention the last year. Do you think we're nearing the bottom yet?
I think it's always very hard to say when we are close to the bottom, but we're probably somewhere very near it. I bought some of our fund last week myself, and I was very close to pushing the buy button this morning again, but I didn't, and maybe there will be a little bit of further escalation, and then I would think very strong performance from the market, but we're probably somewhere close to the bottom.
Yeah, no, I mean, as if there wasn't enough turmoil, right? Biden this week actually had to go and make everything personal and saying that he would impose sanctions on Putin if Russia should invade. I mean, how likely of an outcome do we think this is?
Well, I think if we look at the market, and I will just show one or two slides to start with. The market is pricing current political events just like the annexation of Crimea. So we are at a risk premium of about 12% for the market. It was down to 4%. And again, these are just record high levels, right? So, it's a theoretical measurement, obviously, but it's showing the fear of investors of what's going to happen. And if I flip to another slide and speaking about scenarios, so I have 4 scenarios for the markets just to make things concrete. The first scenario, which I think is what the West is considering the base case. I think in the West, a lot of people think that there would be a real war. There would be tanks on the ground in the Ukraine, and large part of the country basically being taken or annexed or something along those lines by Russia. I think that's very unlikely. I think in such a scenario, you would see sanctions on SWIFT, on Nord Stream 2. The ruble would be taking a hit, and the market would be taking a hit. I'm not sure actually if you can see my slides. If not, please share them. But again, I think this is a very low likelihood scenario. Is it 1 or 3%? I don't know, but I think it's somewhere along these lines. But the market is almost pricing the scenario, I would say. Yeah, it would be great if we can share the slides, please.
Goes up.
I think the second scenario is in terms of a intervention in next slide, please. Next again. The second one is on a possible entry of Russian forces in the Donbas area. I think this is a possible scenario. There has been talks about this, and Russians are saying that Ukraine is aggressively ramping up their forces or preparing for an attack in the Donbas, which would be then a reason or an excuse for Russian forces to actually officially enter Ukrainian territory, because now it's not officially Russian forces there. They are obviously supported by Russia, but they're not officially Russian forces. So this would also trigger a reaction from the West. It would trigger sanctions. It would very likely trigger a milder form of sanctions. If you look on the draft bill from the US on the sanctions, it does leave a lot of room for turning up or down the volume in terms of sanctions. So again, you know, Russia taking large parts of Ukraine, there would be very tough sanctions. If Russia was to enter the Donbas area, there would be sanctions, but they would simply be milder. And I think in such a scenario, there would be probably a short-term sell-off in the market, but then it would be a very kind of strong recovery. Don't forget that from April last year until October, the market was up 40%. So we also had tanks on the border. And actually this morning, we had news that Russia is removing their forces from Belarus. They were there for an exercise, but now they're returning back home. Actually, they just came there 2 days ago. So that's at least, you know, a small piece of good news, I think, in this relatively volatile environment. The third scenario is a status quo where the troops remain on the border, and there is kind of little breakthrough in terms of negotiations, but at least there is some sort of understanding from both sides. And I think this is what we're seeing this week, right? So the US has handed in written answers on a number of Russian demands. We don't know because it's not public, but we are hearing that it's things like, you know, agreeing on not putting missiles in the Ukraine, which is for Russia, you know, a sensitive topic. And maybe, you know, this would be kind of good enough for Russians to slowly de-escalate. This is our base case scenario. There would probably be some more war of words, etc., and statements, but then slowly this would evaporate. Slowly, Russian troops would leave the border, and I think in this scenario, the market will perform also quite strongly. The fourth version, which is the most optimistic, is that there is a formal agreement between Russia and the West about NATO, about the future of potential NATO membership for Ukraine, etc. I don't think we'll get there, but that of course would mean a very sharp recovery for the Russian market.
Yeah. No, I mean, it's obviously very, very interesting to hear your side of it, right? Because as we've seen ever since our talk last week, we got your sentiment of what it's like on the ground, but then we've also had Western media, which seems to want to portray that everything is getting worse and this situation is getting even worse than what, you know, what we think and what we know of. I mean, what's the correlation between what you're seeing and between maybe what Western media is showing compared to maybe what you're hearing there on the ground? You touched on it a bit, but if you could just focus on that a little bit more.
Yeah, so I had dinner last night with the head of Goldman Sachs here, so, you know, big US investment bank, and he was putting it this way, that, you know, that is 11 out of 10, you know, so the volume is simply very, very loud. And I think that's a pretty fair summary. And the volume in Russian media about this conflict is probably 2 or 3. So yes, you know, it is in Russian media, but it's relatively toned down. And I think this of course taints the minds of investors, right? So your risk premium if you're in the West is super high, whereas if you're in Russia, it is not that high. And that's the interesting discrepancy, and it's the largest discrepancy I have seen in terms of risk perception of the Russian market. And we do have record inflow from local investors, and that is continuing throughout this period. So local Russian investors are deploying record amounts of money in the market. If they were really afraid of a war, I doubt they would deploy record amounts of money into the market. But Western investors are afraid. Again, I think it's a little bit part of the media reporting, and they are taking money out of Russia.
Yeah, I mean, so you touched on the next thing I wanted to ask you, because it's based, you know, if the locals are investing, right, and then we talked about peak uncertainty last week, and the ability, you know, that creates opportunities for people. I wanted to ask you about foreign activity. Are we seeing money moving in, moving out? I mean, has it changed a lot over the last week, or are we do we expect to maybe see foreign activity follow maybe the locals?
No, foreign activity will follow with a lag. So foreign investors, they will come into Russia when there is some sort of resolution of the situation, right? So either in this best case scenario that I had, where there is a formal agreement, Western investors will panic and they will jump at the market. It will be up very, very sharply. I think 10-15% per day in a couple of days. But in this base case scenario, I think that Western investors would probably slowly come back. They would slowly buy the market when they see these Russian forces leaving. That's exactly what we saw in April last year, albeit now the drop has been larger than it was in April last year. So the turnaround would also probably be sharper. But I would probably like to stick to fundamentals here. So the Russian market since October is down 31%, but that's on the back of significantly higher gas, oil, and other commodity prices. So in reality, this is more like a 40-45% drop. And if we please show the slide with the dividend yield of Gazprom. Yeah, here you can see the oil and gas prices, right? So gas prices are at levels which are 376% higher since January 2021. Oil is 70% or 73% higher. So it's a very, very large increase. Gas prices are a bit down from the peak, but still we're in a completely new kind of paradigm in terms of gas prices. And oil prices will likely kind of slowly climb upwards this year when you see the effects of COVID slowly kind of fading. If we move one slide, please. One more. So I think when we speak about Russia, I always refer to numbers because there's a lot of skepticism typically. So for Gazprom, they are not fully reaping the benefits of the high gas prices for last year, because gas is priced in sort of a relatively complicated formula, but a lot of it is priced on a 1 month forward basis. So let's say the high prices in December, actually they're getting them in January, right? So they're getting them for 2022. But the dividend yield for Gazprom is around 16-18% for 2021, but it's around 23% for 2022. So you're getting a 40% yield for 18 months. And I think this is new. We have never ever seen these type of variations on the Russian market. We have seen the Russian market falling 80% before, and this time around it fell 40%. But when it fell 80%, oil and gas prices also tumbled. This time around, gas prices are 400% higher. That's the difference. And then if you look on the numbers, you can see, I mean, the average dividend yield for Gazprom used to be around 6%. Now it's, depending on the year, as I said, 16 to 18 for 21, or around 23% for 2022. So to me, again, coming back to your question, when is the bottom? I don't know when is the bottom, but I think this is sort of starting to sink into investors' mind that actually stocks might not be down that much on an historical basis, but the dividend yields are 2 or 3 or 4 times higher than the historical averages.
Yeah, well, I mean, it's an incredible situation, incredible time that it is right now, and I think what's interesting is that I think a lot of people thought that we would have to wait for the turmoil to subside in order for the markets to thrive. But I mean, we are starting to see maybe that there is a chance that we can still, I mean, the markets can recover even though there is this turmoil, and because we do believe that it is probably subsiding, right? And so I think to a certain extent, as you said, maybe the smart money is following the locals.
Well, again, it's very hard to time the bottom, but I think there's a global dimension to this as well. If there was no geopolitical noise, I'm perfectly convinced that Russia would be one of the best markets year to date. Why? Well, because it is the year of value stocks. We are seeing a relatively hawkish Fed, and typically markets, and especially the growth part of the market, performs relatively poorly when you are in the cycle of increasing interest rates, and maybe increasing interest rates faster than expected. So if we look globally, I mean, the worst large index is NASDAQ, and all sorts of value countries and value sectors are very strongly outperforming. So the Russian market is an underperformer this year, but Russia is probably the value market #1 in the world. So this is a bit on a relative basis, right? But maybe the Russian market should have been up 10% this year instead of down 15%, again, without geopolitical noise. So I think this is an aspect that no one really cares about now, but I think that's also an aspect that will certainly come back when you see this geopolitical noise fading. I will not call for the bottom. It's very hard to do. I think for any investor, the best thing to do is probably to not to try to time it perfectly, because you never can. I personally also like to do that. I would like to buy our fund when at the worst day and make money from there, but it's just hard. So maybe the best way is to enter with 1/3 of the money today, 1/3 later, and maybe save 1/3 and see what happens.
Yeah. Oh, that sounds like sound thoughts, Jacob. Well, that's all we've got for you today. Jacob, thank you very much for your time. Appreciate you calling on and keeping us up to date from Moscow and from on the ground.
Yeah, thank you.
Thank you. Thank you to everybody who's joined us today. If you have any other questions or if you'd like some more information, please do not hesitate to reach out to your IR representative or to any of us here at East Capital, and we'll do our best to help you. Thank you, and see you soon.